Hello again and welcome back. If you haven't watched my introductory video, let me just quickly introduce myself. I am Michelle Young, broker and owner of Michelle Young Financial. If you haven't gotten a mortgage loan in the last 3 to 4 years, you're going to discover that the process is very different than it used to be. So be patient. I'm here to help you. Oh, before I begin, I'd like to remind you to please try not to shoot the messenger. Mortgages and interest rates are a very different animal than they were in years past. In the past, when you got a mortgage loan through your local bank, you'd make your payments to that bank. They made the decisions based on your individual needs and the unique circumstances surrounding you, your property, and your community. You'd go into the local bank and see them advertising a mortgage rate, and that rate card looked like it had been aging at least as long as the best wine in your cellar. But those days are gone, and the entire mortgage industry has been overhauled dramatically. The overhaul was in response to a changing environment, which was, in part, created by a change in how mortgages were dealt with in the secondary marketplace. If you've ever had a mortgage loan that was funded by one bank, then sold to another, and then another, well, you now understand the definition of the secondary mortgage market. It's a place where mortgages are sold to servicers behind the scene, at a profit of course, in order to free up capital so that banks can make more loans. You see, there are strict reserve requirements in place for banks, which they must adhere to, so selling mortgages is one way to free capital, which allows them to make more loans. There are large profits to be made by selling mortgages into the secondary marketplace, and this keeps the flow of money constantly moving. When Wall Street began bundling up mortgages into what is now known as mortgage-backed securities, the face of the mortgage industry changed forever. Our modern mortgage market is governed by the two government entities known as Fannie Mae and Freddie Mac. Once privately held corporations, these two federal organizations now control the secondary market by writing guidelines in which mortgage loans can be made and providing a marketplace for them. They write the rules, and if the loan meets their standards, it's purchased from the funding bank, which frees up their capital so they can make more loans. Sounds simple, right? Well, as with all good government agencies and programs, it's anything but simple. But never fear, that's what I'm here for, is to help you wade through an ever-growing mountain of paperwork and regulation and guideline changes, and to find you a lender that will work within your unique and individual needs, and to get you the best possible mortgage loan and the best possible interest rate with the least possible amount of headache. Remember, this may be one of the largest and most important financial transactions that you will ever make. You might only do this 4 or 5 times in your entire lifetime, but I do this every single day. It's your home and it's your future, but it's my profession and my passion. I'm here, ready to work for your best interest. The largest financial transaction of your life is far too important to place in the hands of someone who's not capable of advising you properly and troubleshooting the issues that might arise along the way. So I want to take a moment and explain the process to you so that you understand what's coming. It is my sincere intention to help you through this process with as few headaches as possible. However, there will be headaches. No matter how clean your file is, no matter how good your credit is, or how much money you have in the bank, the lender is going to ask you for a mountain of paperwork and documentation, and some of it is probably going to frustrate you, so please try to be prepared. One of the ways that I try to make the process easier for you is to gather your supporting documentation in advance and complete the loan application paperwork for you. There's about 35 pages of forms to complete and sign in a typical loan application. This just gets the process started. So if you're obtaining a government loan like an FHA or a VA loan, you're going to be prepared for probably another 10 to 15 additional forms. Many of the forms that you see are going to look redundant and repetitive, but they're still required. I'm going to ask you for the documents that are required by Fannie Mae and Freddie Mac based on their basic guidelines to support your income, your assets, and your creditworthiness. Once I have these documents, I then extract the information needed to complete the forms for you, which should save you significant time. The application documents are then sent to you to be reviewed for accuracy, signed, dated, and returned to me. In today's modern mortgage market, everything is done on the internet, so please be prepared to use your email address, and if you don't have the ability to scan PDF files and email them, you're going to need to find a fax machine. That's going to be the easiest way for you. Hopefully you've got the technology to scan documents. That will make ultimately your life and my life a bit easier going forward. PDF files are the only kind of files that my lenders can use. Once I receive your completed loan application, the party has officially started. By this time, I've had a chance to process your unique situation and determine whether your file needs the attention of a special underwriting team. For example, some underwriters are much more strict when a borrower is self-employed than others are. So if you're self-employed and your income stream is even slightly complicated or iffy, then your loan is going to be sent to an underwriter who has more knowledge and is savvy in the ways of calculating self-employment income. Once I've determined where your loan is to be sent, then I prepare a multitude of forms required from that particular lender and combine with your application and supporting documents to be submitted to that lender. Once your file is in the hands of my lender, then my lender is required by federal law to issue disclosures very similar to those you will have already seen, issued by me. These disclosures are sent via electronic mail for you to accept. They're not required to be printed, signed, or returned to myself or to the lender. They are only required by law to be sent by the lender and accepted or received by you. There are instructions in the email you receive which will walk you through the acceptance process. If you cannot or will not accept the disclosures by email, they must be mailed to you by U.S. mail. If that happens, this will hold up the processing of your file for 7 calendar days. That's federal law. So take a moment, check your email, and make sure you go through the process to accept those disclosures. It's important. I can't order your appraisal until that process is completed. Please remember too that just because you've accepted these disclosure documents, it doesn't mean that you've agreed to the terms, you've not agreed to the interest rate, the loan amount and term. All of that can be changed later at your election. Any change to the terms of the loan, however, will require redisclosure and reacceptance by you in the same manner. There are strict laws now that govern the disclosure requirements in place so that even though it may seem repetitive and redundant to you, it is required and it is a good thing. At this point, your interest rate may or may not be locked. The interest rate selection process is complex and confusing in itself, so in an effort to keep these videos short and to the point, I'm going to ask you to watch the sister video called Selecting an Interest Rate at a later time. Now that the loan's been submitted and you've accepted the disclosures, I'm cleared to order your appraisal, and the loan gets sent to an underwriter for review. Underwriting turn times vary from lender to lender, but generally speaking, the process will take about 5 business days or a week before we get your formal loan approval, at which time the underwriter will ask for additional documentation or perhaps some letters of explanation from you to clarify any items that they find to be unclear. These are what we call conditions. I like to use the analogy that an underwriter looks at your file as a puzzle. So if you think about that in your mind, if you give somebody a puzzle that has 500 pieces unassembled and you kind of throw it on their desk, it's going to take them a while to put that puzzle together. It's my job, with your help, to give the underwriter that puzzle, which is your loan file, already put together in a nice pretty picture. So if I ask you for additional clarification in letters of explanation, for example, there's a reason for that. If we have sufficient time, I usually like to wait until the preliminary approval is received before I order your appraisal and spend your appraisal dollars. That way we can review the conditions and determine whether or not they're items we can easily provide to the underwriter or whether or not they're deal breakers. Once we submit our conditions back to the lender and receive our appraisal report, the underwriter will then review your file again and sign off on the conditions as long as they're acceptable. Occasionally, the underwriter will request additional documents based on the conditions submitted or even on the appraisal report. The process continues like this until all the conditions are received, reviewed, and signed off, at which time we're then cleared to close. Once we have the green light to close, then I order your final loan documents. If your interest rate has not yet been locked, it is the last and final thing that needs to be done before we can get our final paperwork drawn up for signatures. The document process generally takes about 48 to 72 hours. Once documents are entitled, then the title company processes their paperwork and makes an appointment for you to come in and sign your closing paperwork. This can be done in the local title company or at a branch closer to you if you live out of town. It can even be arranged in the evening with a mobile notary at your home for convenience if need be. Once your final paperwork is all signed, it's all sent back to the lender for final review and audit, and then the loan funds. The closing process generally takes another 2 to 3 days once the funds are received by the title company. The transfer deeds can then be recorded in the county, and your escrow will officially close, and the house then becomes yours. In the case of a refinance, of course, the house is already yours. We have just paid off your existing lender, and you'll begin your new loan repayment plan with your new lender at that time. Congratulations, you survived the loan process.